Today, I'm going to share 5 key predictions for the Canadian real estate market in 2024. Let's dive right in. Hi, and welcome back to the channel, everyone. My name is Ben Robitaille, your local real estate expert here in Simcoe County and South Muskoka. And 2025 is gearing up to be a busy year in real estate, barring some obstacles that might get in the way. So without further ado, my first prediction for 2025 is that we're going to see continued growth in secondary real estate markets. Since the pandemic and now in this post-pandemic era, companies are starting to allow more and more employees to work at home. And what that means is people are able to move outside the city, get a little bit more space, a little bit more house, and really enjoy their life outside of work that much more rather than being downtown in the thick of it. And not only that, these houses that come with more space and more yard are often more affordable than the major centers which these people are moving from. For example, if we go back to November of last year, November 2024, the average house price in Toronto was just north of $1 million. Whereas if you travel a little further north into Simcoe County, that average price point was just above $750. So not only is your dollar going further by moving out of these major centers, but you're able to enjoy your lifestyle a little bit more. And personally, I think this trend is going to continue well into 2025 and beyond. My second prediction for the real estate market for 2025 is the stabilization of interest rates. Now you might be saying, Ben, what are you talking about? Rates have gone up, they've come down. What do you mean stabilization? Well, there's 3 ways to look at interest rates. Are the rates so low that the Bank of Canada is trying to stimulate the economy? Are we in this middle zone of neutrality? Or are the rates high where we're trying to pull back on the economy? Now, after this long period of fluctuation where we had really low rates during the pandemic, all the way up to high rates post-pandemic, the current rate as of the recording of this video is 3.25%. Now, according to BNN Bloomberg, the neutral zone in Canada for the rate is somewhere between 2.25 and 3.25. So right now we're on that upper end of the echelon. A lot of institutions are predicting another 2 rate cuts in the new year, which is going to put us right smack in the middle of that neutral zone, where the interest rate isn't necessarily pushing the economy forward, but it's not pulling it back either. But if we look at this rate from the perspective of buyers who've been in the market for the last year and a half have seen these high rates and saw their purchasing power drop dramatically. Now with rates coming down, a lot of those buyers who were maybe priced out of the market due to a payment are now seeing their dollar go further because they can get into these homes at lower rates than a year ago. Now I just did this really quick using a mortgage calculator, but if we look at the payment on a $500,000 home with a 20% down payment, a 4.5 interest rate on that mortgage will give you a price point of about $2,200 a month on your mortgage payment. Now drop that rate down to 3.5%, and your payment drops by about $200 a month to $2,000, which leads me into my third prediction: increased demand for homes. Gearing up for a busy 2025. As the population continues to grow, yes, we've slowed down on immigration, but people continue to prioritize home ownership as a stable investment. Millennials are now at a prime home buying age and really a driving force in the market. And although we've pulled back on immigration, there is still immigration into Canada, and those people are looking for homes as well. Combine this with the fact that on December 15th of 2024, the Government of Canada changed some rules around how mortgages work. And there were 2 main takeaways from this. The first, which I don't think really will affect that many people, is now you can get an insured mortgage up to $1.5 million. Now, if you're asking what is an insured mortgage, it's really any mortgage that has less than 20% down. 20% is that magic number for banks where they don't require you to purchase mortgage insurance. So what that means, the minimum down payment on a house is 5% on the first $500,000 and then 10% on the remaining portion. So let's say you're buying a house for $1.5 million. Previously, you couldn't get an insured mortgage, which means you needed 20% down, no ifs, ands, or buts. So here you go, here's $300,000. I would like to buy my $1.5 million house. Now, even though somebody may be able to theoretically afford a $1.5 million house, coming up with a $300,000 down payment is sometimes a barrier for people looking in that price range. I don't think it's a large portion of the population who's out there buying houses, but still a factor to consider. That $1.5 million house now has a minimum down payment of $150,000. So the barrier to get into that house is that much less. Sure, you're paying mortgage insurance on the rest of your mortgage, but all of a sudden you can get into that house much, much quicker. whether that works for you or not. But the second change that the Canadian government made, which I think is going to affect more people, is they allowed mortgages to be insured over a 30-year amortization versus the 25-year that they used to have in place. Now, I'm not here to talk about what product is better. Should you go for a longer amortization or a short? The fact of the matter is, yes, if you mortgage for longer, you're going to pay more in interest over the lifetime of that mortgage. But what I find is a lot of first-time buyers aren't worried about the mortgage payment 25 years from now. They're worried about what they can handle as a payment today. And if they can stretch that mortgage out from 25 to 30 years and save themselves $200 a month on the mortgage payment today, at least initially as they're getting into the market, that's going to make life a little bit easier for them and hopefully take some of the financial stress off that already exists when you're out buying your first home. There. Prediction number 4, we're going to see a rise in multi-generational living. Now, I have excellent in-laws, so I'm not worried in the slightest about this. But there's going to be some economic pressures that come into play that really start merging families into one household. My background is health sciences. I went to school for health sciences, got my degree, putting it to good use, Mom, don't worry. The fact is, long-term care homes have long waiting lists. Retirement communities have very high fees. So a lot of children/caregivers are going to be taking parents into their own homes, meaning they're either going to need to move, create more space in their existing homes, but at the end of the day, we're going to have more generations living under the same roof than ever before. And there's been talk in the media about this big generational wealth transfer that's coming, but more and more reports are stating that this wealth transfer isn't going to be super liquid, meaning mom and dad aren't going to be handing over a ton of cash to their children when they pass on. They're going to be handing things over to their children, and some of these things may have lost value. The big thing that comes to mind, and I see people saddled with all the time, myself included, is antique furniture. Yes, these pieces are grand, beautiful, and great, but nobody wants them anymore, which is sad, and go off on a tangent about this. But the fact of the matter is, this big wealth transfer that's coming might not be as significant as we think it is. And I think that's also going to lead to more families with more generations under one roof. And my final prediction for 2025 is some growth in the luxury space. So the luxury market is much less volatile to the ebbs and flows that affects what I like to call the everyday housing market. Now, every market kind of has a different threshold for what they would define as a luxury property. Seeing as how Toronto has an average price point of over $1 million, I would say $1 million plus is not necessarily your luxury market. In our market here, $1 million plus is definitely getting into luxury territory when our average price point is about $750. But most markets across Canada actually saw an increase in luxury home sales over the first 8 months of 2024. The only exceptions to this were Toronto, Vancouver, and Halifax, oddly enough. However, Halifax and Toronto both saw increases in their luxury market. Halifax, a year-over-year median increase of 8.6%, and Toronto saw a 3.9% increase. Now, luxury buyers are often very deliberate in knowing what they want and taking their time in finding the perfect home. But this market is also characterized by having a smaller buyer pool, which means people in this segment of the market have more time to be more calculated, more measured when making big decisions. But a lot of experts nationwide, include myself in there, are anticipating some increased activity in the luxury space in the real estate market for 2025. Those are the 5 predictions I have for you this year. Let me know what you think in the comments. If you disagree with any of my predictions, let me know why. Or if you've got your own, I'd also love to hear them. Thanks so much for making it to the end of this video. If you don't mind hitting that subscribe button, we'd love to have you follow the channel, and we'll see you in the next one.